All right, get ready because we're diving deep today into a year-end tax strategy that you probably haven't heard about before.
Yeah.
We're calling it harvesting appreciation,
Mm.
and we're going to be looking at some excerpts from an article by the same name to explain everything.
Sounds good.
So, I think a lot of people this time of year are thinking about ways to minimize their losses,
Right.
but this approach is really interesting because it actually focuses on maximizing gains.
Yeah, that's a good point. A
Yeah.
lot of people this time of year, they're kind of just focused on minimizing losses,
Uh-huh.
tax loss harvesting.
Right, exactly.
But what's interesting about this approach is it's not just about minimizing losses. It's about actually maximizing gains for a potential tax advantage.
Yeah.
It's kind of like turning the whole tax loss harvesting idea on its head.
Yeah, exactly. And I love that the article uses this analogy of harvesting crops because it really helps to understand,
Right.
a farmer doesn't just pick anything, they select the ripest produce to get the best
Mm.
yield. And so, similarly, we're talking about strategically selling investments that
Mhm.
have grown in value
Yep.
to realize gains at a favorable tax rate.
It's true. A farmer doesn't just pick anything, right? They select the ripest produce for the best yield. And similarly, we're talking about strategically selling investments that have grown in value to realize those gains at a favorable tax rate.
Right. And the article mentions this married couple, they had a taxable income of $50,000, and they were able to use the strategy to realize almost $40,000 in gains
Wow.
and pay zero federal taxes.
That's amazing.
Done that.
Yeah, and that's because long-term capital gains, the profit from selling assets that you've held for over a year
Right.
are taxed differently than your regular income.
Oh, okay.
So there are certain scenarios, like the one with this couple, where that tax rate on those gains can be as low as 0%.
Okay, wait, hold on. 0%.
Yeah,
So you're saying that there's a way to potentially make money
potentially, yeah.
and not owe any federal taxes on it?
In certain situations, yes.
Sign me up. But how does this whole harvesting thing actually work?
Right.
Like, do I just sell my winning stocks and that's it?
Not so fast. There's a little more to it than that.
Okay.
So after you sell that appreciated stock, you immediately repurchase the same one or a similar one.
Oh, okay.
And what this does is this resets your cost basis.
What's that?
Yeah, so your cost basis is essentially the price that you paid for the stock.
Okay.
So you're resetting that to the current market value.
So it's not like a one-time sale, you're staying invested, but strategically resetting things.
Exactly.
But how does this help with future taxes?
Right.
Is this like some kind of accounting magic trick or something?
I mean, you could think of it that way.
Okay.
So think of it like this. Let's say you buy a stock at $50,
Right.
and now it's worth $100. If you sell it and immediately buy it back at $100, your new cost basis becomes $100. So if that stock continues to climb to, let's say, $150, you would only owe taxes on that $50 gain from $100 to $150, not the entire $100 gain from your original purchase price.
Got it. So you're basically fast-forwarding the clock on your gains.
Yeah, you could think of it that way.
Paying taxes on a smaller portion now to potentially save more later.
Right.
Pretty slick.
Yeah, it can be a pretty strategic way to manage your taxes.
Okay, so why is it so important to do this now? Was there something special about this year?
There are actually a few reasons why this could be a good time to think about harvesting some appreciation.
Okay.
So first of all, it locks in the current long-term capital gains tax rates,
Okay.
which, as we mentioned, could be really favorable right now.
Makes sense. So, especially if you're thinking you might be making more money in the future,
Right.
maybe you're getting a promotion or you're starting a new business, something like that.
Yeah.
Taking advantage of these potentially lower rates now could be a huge win.
That's right. It's all about planning ahead, right?
Huh.
And, thinking about the possibility of future tax increases, we don't have a crystal ball,
Yeah.
but tax policies can change, so being prepared is always a good thing.
Yeah, so it's kind of like an insurance policy against potential tax hikes,
Exactly.
down the road.
Yeah.
And of course, resetting that cost basis, like we talked about, that can really lower your tax burden in the future.
Right.
So are there other reasons
Yeah.
why someone might want to consider harvesting gains now?
Absolutely.
Yeah.
It can also give you an opportunity for portfolio diversification.
Okay.
So, if you have one particular stock that's a big part of your holdings,
Mm-hmm.
harvesting some gains can let you spread that money into other assets, potentially reducing some risk.
Oh, okay. So it's not just about minimizing taxes. It's also about managing your investments
Check.
for the long term. I see how all the pieces fit together now.
Uh-huh.
But I think before everybody runs off and starts selling all their stocks, we need to emphasize that you have to plan carefully.
Right.
And it's probably a good idea to talk to a professional, right?
Yeah, absolutely. This isn't, a one-size-fits-all kind of thing.
Wow.
So you really need to carefully think about your tax bracket, where you are now and where you think you're going to be in the future,
Got it.
just to make sure that you're not pushing yourself into a higher tax bracket.
Right. Okay. And we can't forget about state taxes, right?
Oh, yeah, for sure. State taxes, they're all over the place.
They vary a lot.
Yeah, they do. And you have to factor that into your calculations.
Okay, so we've got federal taxes, state taxes, what else?
Well, you also have to be mindful of the Medicare surtax threshold. So if your income is above a certain amount, you'll get hit with a 3.8% surtax.
Oh, I see.
So it's really important to plan accordingly, especially if you're close to that threshold.
Okay, so federal taxes, state taxes, Medicare. Is there anything else we need to keep in mind?
This is where things get kind of interesting. So you can actually use the money that you get from those harvested gains for other things like Roth IRA conversions or even charitable giving.
Okay.
And both of those can potentially give you even more tax advantages.
Okay, so it's not just about reducing taxes on the gains themselves,
Right.
but it's about potentially like maximizing tax benefits across your entire financial picture.
Exactly.
I like that.
Yeah, so it can be a really powerful tool if you use it strategically.
We need to talk about the elephant in the room, the wash sale rule.
Oh, yeah,
Can you explain what that is and why it's important?
Sure. So the wash sale rule basically says that you can't claim a tax loss if you sell a security at a loss
Okay.
and then repurchase the same one or a substantially identical one within 30 days before or after that sale.
So you can't play games with the system, basically.
Right. Yeah, the IRS, they want to make sure that people aren't just trying to create losses just to get a tax break.
Right. Okay.
So how does that apply to harvesting appreciation?
Yeah.
Well, the key thing here is that the wash sale rule only applies to losses, not gains.
Okay.
So when you're harvesting appreciation, you don't have to worry about it as long as you're buying back that same or similar stock.
Okay, phew. That's a relief.
Yeah.
So harvesting appreciation sounds like it could be a great tool, but it's not for everyone.
Right.
Are there times when it might not be the best move?
Yeah, for sure. So, like, for example, if you're in a high tax bracket this year,
Okay.
but you think your income's going to be lower next year, it might make sense to just wait
Okay.
to defer those gains until you're in that lower tax bracket.
Yeah, so don't rush to pay more in taxes now if you could potentially pay less later, right?
Exactly.
Are there other scenarios where maybe it's not a good idea to harvest?
Yeah, absolutely. If you're thinking about donating appreciated investments directly to a charity,
Mm-hmm.
or you're planning to transfer them when you pass away,
Yeah.
you might not need to harvest because the cost basis usually steps up to the market value when that happens.
Right. So that means that the person receiving those assets wouldn't have to pay capital gains tax on those gains.
Got it.
So if you're planning to give those assets away anyway, you might as well just let the recipient enjoy that benefit.
That makes
Wow.
sense. So at the end of the day, the most important thing is to make sure that this strategy actually aligns with your overall financial goals, right?
Right.
Tax optimization is important, but you don't want to do it at the expense of your, long-term financial well-being.
I agree. Every financial decision that you make should be part of a bigger plan for your own personal goals and your own situation.
Great point. That's a great point to end on. We've covered a lot today, from like the very basic idea of harvesting appreciation to some of the potential benefits and also the potential drawbacks.
Right.
I'm sure your brain is probably full right now trying to process all this information. So we're going to take a break.
And when we come back, we'll talk more about who can really benefit from this strategy and how to get started if it sounds like it might be a good fit for you.
Sounds good.
Don't go anywhere.
We'll be right back.
Welcome back. We've been talking about this strategy called harvesting appreciation,
Right.
which is strategically selling assets that you own
Yeah.
to try to lower your tax bill, maybe now, maybe in the future.
Yeah, that's right. And as we talked about earlier, it's not just, a tax trick. It's really about making sure that your investments
Right.
are in line with what you're trying to do, your broader financial goals.
Exactly. And before the break, we were talking about some times when this might not be the right strategy for people.
Uh-huh.
But now let's look at the other side of that coin. Who stands to benefit the most? Who should be like really seriously considering this?
Well, this can be especially helpful for folks who think they're going to be in a lower tax bracket this year
Okay.
than they will be in the future.
Got it. So you're thinking, okay, maybe my tax situation right now is pretty good,
Yeah.
but who knows what could happen down the road.
Exactly. So, like, think about, for example, retirees.
Okay.
They often have lower taxable income in those first few years after they retire.
Right.
So that makes it a good time to harvest some of those gains and lock in those, lower rates.
It's like getting a head start on, minimizing taxes and retirement, which can make a huge difference in how long your savings last.
Absolutely. And it's not just for retirees. Anyone who thinks that their income is going to jump up in the future.
Okay.
Maybe a promotion, or they're starting a business, or maybe even an inheritance. Those are all things that can...
Right. So be proactive and think about those future tax implications, right? If you know that your income's probably going to be higher and you're going to be in a higher tax bracket, why not take advantage of the lower rates now while you can?
That's exactly right.
Mm-hmm.
And another group of people who can often use this strategy effectively are folks who have a lot of their money in one specific stock.
Got it. So you have like a concentrated stock position.
Right, exactly.
You've been holding on to the stock for years. It's done really well, but now it's like way too big a part of your portfolio.
Yeah, that's right. So let's say you've had a stock for years,
Okay.
right? And it's just done really, really well. It's a big chunk of your portfolio.
Okay.
Harvesting some of those gains lets you take some of that money and put it somewhere else, maybe create a more balanced portfolio.
Yeah, it's like taking some chips off the table when you're, winning at the casino.
Yeah.
You lock in some of those profits and spread your bets a little bit.
Right, exactly. That's a great analogy.
And is there a connection here with charitable giving at all?
Yeah, there can be.
Okay.
Remember how we were talking about using that money from harvested gains for, different financial goals?
Right.
Charitable giving, that's definitely a financial goal.
So if you're thinking about making a big donation, you could use some of those proceeds to fund it.
Exactly. And the really cool thing is, if you donate appreciated stock directly to a charity,
Okay.
you can often totally avoid paying capital gains tax on those gains.
Oh, wow. That's fantastic. So you're supporting a cause you care about,
Right.
and you're also potentially reducing your taxes.
Right.
Win-win.
Exactly, a win-win. So it can be a pretty powerful way to be generous.
Okay, so let's be realistic. Not everybody's, a financial genius
Yeah.
or a tax expert.
Uh-huh.
This all sounds really great, but how do you actually put it into action? It seems like it could get, really complicated really fast.
Yeah, it can be.
Yeah.
And that's why it's so important to really think about it carefully.
Okay.
And maybe get some advice from a professional, someone who knows what they're doing.
So step one, find a financial advisor or a tax professional
Right.
who can help you navigate this whole process.
Yeah, exactly. Someone who can look at your situation, look at what investments you have,
Yeah.
and help you figure out
Yeah.
if this is actually going to work for you or not.
They can help you, run the numbers and make sure you're not going to be surprised by, some weird tax consequence later.
Exactly. And don't be afraid to ask them a lot of questions.
Yeah.
Make sure you really understand what's going on, what it all means.
Knowledge is power, especially with finances, right?
That's right. And there are also a lot of resources online.
Okay.
If you're using one of those online brokerage platforms, they often have tools and resources that can help you with tax planning.
Oh, okay. So definitely check those out.
Yeah, you might find calculators, maybe some articles or videos that can help you understand.
Okay.
And of course, there's always just good old-fashioned research.
Right.
There are a lot of websites and financial publications out there that have really good information on tax harvesting.
So use the internet to your advantage. But of course, not everything you read online is going to be accurate or apply to your specific situation, right?
That's right. And that's why, at the end of the day, it's always best to talk to someone who actually knows you and your finances.
Yeah.
Someone who can give you advice that is tailored to your specific needs and goals.
It's like having a financial co-pilot, to guide you through all this stuff.
Exactly. Someone to help you navigate all the tricky parts and avoid those potential pitfalls.
I like it. Well, I feel like we've talked about pretty much everything there is to know about harvesting appreciation.
Yeah, I think so.
We've covered the concept, the benefits, the potential problems, even how to get started. Before we wrap up this section, is there anything else, any final thoughts for our listeners?
Yeah, one last thing. I think it's really important to not get so caught up in trying to minimize your taxes that you forget about your bigger financial goals.
Right.
Investing, it's a long game.
Yeah.
And while saving on taxes is great, you don't want to do that at the expense of making good investment decisions.
Right. So it's all about finding that balance, right?
That's right. Between getting those great returns and minimizing your taxes.
Okay. I think our listeners are probably ready to start thinking about whether this is something that they should be doing.
Yeah.
We've given them a lot to digest, I'm sure.
Definitely.
And we're going to be right back after a quick break.
Okay.
With some final thoughts and a question to leave you thinking.
Sounds good.
Stay tuned. We're back for the last part of our deep dive on harvesting appreciation. We've really gone depth on this strategy, right?
Yeah, we really have. From the basics to some of the downsides, the benefits, how to actually do it.
Yeah, we talked about federal taxes, state taxes, even that Medicare surtax thing.
Right.
Even talked about how this can help if you're, giving to charities. But now I think it's time to kind of bring it all together. So what does this all mean for, the average person? Why should they even care about this whole harvesting appreciation thing?
Well, I think it really boils down to taking control of your financial future.
Okay.
It's about being proactive, making those smart choices now so you can, reach your goals.
And it's not just about trying to pay less in taxes.
Yeah.
It's about building a secure financial future for yourself, your family.
Exactly.
So here's a question for you to think about.
Okay.
If you could pay less in taxes and to set yourself up, position your investments better, what would that allow you to do?
That's a good question. Would it free up money to maybe travel more or start that business you've always dreamed of?
Right.
Maybe retire a little earlier?
Yeah, or give more to, charities that you really care about.
Absolutely.
It's really exciting to think about all the possibilities.
Yeah.
And they're all within reach if you take the time to understand these strategies like harvesting appreciation. But we've said it before, and we'll say it again. You got to get professional help before you make any big financial decisions.
Yeah, that's right. A good financial advisor can really help you tailor their advice to what you're trying to do, your own personal goals.
Yeah.
They can, help you figure out the details, avoid those mistakes that people sometimes make, and just, make sure everything is on track.
So don't go it alone, right?
Exactly.
Find an expert to be your financial co-pilot.
I like that.
Well, we've reached the end of our deep dive on harvesting appreciation. Thanks for sticking with us.
It's been fun.
We hope you learned something new and you feel empowered to take those next steps.
And if you found this helpful, tell your friends, family, whoever you think might benefit.
Yeah, let's spread the knowledge and help everyone take control of their financial future.
I love it.
That's all for today. Thanks for joining us. Until next time, stay curious and keep on diving deep.
See you next time.